To talk more about the Line debut and what this means for the IPO market overall, we're joined by Justin Kuczmarski. He's the president of NAV Valuation and Advisory. Justin, good to see you.
Thanks again, Michelle. Thank you for having me back.
Justin, Japanese messaging app Line had its IPO today, the biggest of the year so far, the biggest tech IPO since Alibaba. The stock up 27% from its IPO price, with a market valuation of about $8.6 billion. What's your reaction?
I think the company has to be absolutely ecstatic the way the pricing went today at $8.6 billion implied valuation. Market analysts were originally projecting the company would price at $28 to $30 a share. It was up to $35, and the ending price today of $42 gives the $8.6 implied valuation of the company. I think a lot of investors were really rooting for this IPO, given the sluggish market environment. And I think the company and its investor base has to be absolutely ecstatic.
Well, they have to be happy, obviously. But is it warranted? If you look at the messaging space, you've got WhatsApp owned by Facebook with 1 billion users. You've got Facebook Messenger with 900 million users. And then you've got Line. So how is it different?
I think the company is really unique in that it's strikingly similar, yet very different from WhatsApp, Facebook Messenger, and WeChat. It's very similar in the functionality of messaging apps such as video chat and a lot of other capabilities, but the company is priding itself on being different. And how so? They're going after different functionalities and trying to be an app conglomerate. And what I mean by that is they're trying to offer calendar functionality, gaming, video streaming. They're trying to be different, but at the same time, keep their core messaging capabilities.
Well, let's talk about the different revenue streams. This is one of the few apps that actually does monetize. How does it do it?
I think the company's been successful in top-line growth. Top-line growth was 50% last year to revenue of $1.2 billion. Those revenue streams have been equally diversified across 3 bases: gaming, advertising revenue, which has been only of recently, and the third functionality is these virtual cartoon emojis called stickers. Now, these stickers are really what the company is known for and really have been a growth focus for the past few years.
Well, let's talk about these stickers, because this could be just a fad. I mean, we've seen these things, Candy Crush, come and go. Everybody's excited, and then on to the next thing.
I think the stickers are something that, you're right, it really could be a temporary fad. The diversification of revenue will help the company become profitable. I think the best thing the company has going for it is the diversification, but the diversification has not translated into cash flow and profitability yet. That remains to be seen. It
still does have a solid revenue stream, $1 billion in 2015, but to your point, no profit. So how does it become profitable?
I think the big question facing the company right now is not so much the top-line growth, which investors are really attracted to, but it's controlling cost. If you look at the income statement for Line Corp, 70% of every dollar in sales is grouped into licensing fees, payment processing fees, marketing and compensation.
So it's got a lot of cost.
That's a huge fixed cost.
How does it turn that into making a profit on the bottom line?
I think the huge fixed cost will be there as they pursue different revenue streams, but the company needs to scale and it needs to grow internationally outside of its Asian focus right now.
And that's a big concern because monthly active users at about 218 million in March. Growth has been a little stagnant there. And really, up until today, nobody in the U.S. has even ever heard of this. It's big in Japan, it's big in Taiwan. How does it expand its reach?
I think it has to continue to expand, to diversify its revenue, to go into new markets, and to really use those IPO proceeds to not only continue its strong presence in Asia, but to challenge WhatsApp and Facebook Messenger. And you're right, those companies have close to 1 billion users, with 218 million users for Line Corp. So Line Corp is a fifth of the size of its competitors, and this is a very competitive space, as you know, Michelle. It has to continuously diversify and introduce new offerings that are not just good, but best in class.
Still the biggest tech IPO of the year. Why has the tech IPO market been so sluggish?
I think if you really look at the past 2 years, it's not only at near-term lows, but also at record lows. Just to give you a few stats that have been cited recently, in 2014, there were 55 tech IPOs. In 2015, there were 23. And the first 3 months of 2016, we had 0 tech IPOs. So that the trend is anemic. In comparison to the late 90s when we had 200 to 300 IPOs in tech a year, the pace is well off.
Okay, the late 90s, though, was right before the dot-com bubble burst, so perhaps not the best place to compare it to. But it has been a slow start in terms of IPOs across the board. Are investors just not excited about the technology, or what are the factors at play here? Is it the tech valuations are just too high? What's holding back the tech IPO market?
I think from an operational standpoint, people are excited about the new technology and the new user bases. These companies have, despite a lack of profits and cash flow, they have 200 million users, 1 billion users. But I think what happens is when times get tough, and the past 2 years have been brutal for US and global capital markets, people focus on fundamentals. And the fundamentals for many companies, including Line Corp, which is $1.2 billion in revenue, profitability is not there, and people are looking at that more closely.
Well, Justin, very quickly, you say the markets have been brutal, but we've just hit new record highs. Do you anticipate that shaping the outlook of the IPO market in the second half of the year?
What I mean by brutality in the markets is really the volatility. I think people are still remembering that the volatility of last summer when the equity markets really were all over the place. I think in the next year to 2 years, the IPO market will be sluggish. And I'm basing that opinion by the fact that we have a lot of geopolitical concerns. People are uncertain on a global scale about Brexit. And these messaging apps are truly global. They are used by people all over the world. And right now, in my opinion, there are just too many cyclical and structural dynamics to make the IPO market sustainable and to grow in the next few years.
All right, well, thanks as always for your insight. Justin Kuczmarski, president of NAV Valuation and Advisory.
If you like what you just saw, follow us on social media and visit our website, CCTV-America.com.